Tensions between Russia and Ukraine have decreased this week. More on that, central banks, and its impact on the markets in this video. Roll the intro. Hello and welcome to the Pine Street Capital YouTube channel where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 7 years and today I'm here to bring you some market analysis which is brought to you by the World Series of Trading, the only place where you can make real money trading virtual funds. Now, before we get into this market analysis, I need to remind you that none of these videos constitute as financial advice or advice of any kind to take a position in any financial instrument. So let's get into it. Welcome to this market analysis for the 14th of March 2022. Now, over the past few weeks, we've been watching one story and one story only, and that's what's going on with Russia and Ukraine. But I've got good news for you this week. We're watching something other than Russia and Ukraine, right? And that other something is central banks. So with the central banks, you've got a whole bunch of central banks coming out with interest rate decisions, namely the Federal Reserve, which is expected to increase interest rates by 25 basis points, right? This is their first rate increase. And then you've also got the Bank of England, which has already raised rates twice this year and is expected to make a third consecutive rate hike, which brings the UK interest rate to 0.75%, right? The other one you've got is the Bank of Japan. Not much action expected from the Bank of Japan. However, the yen is at its weakest level since 2017. So you definitely want to be watching that one. Then the other one is the Central Bank of Russia. Now with this entire war situation, you definitely want to be watching them. They say they've only got $600 million worth of reserves left to protect the currency. However, 300 million of it is essentially locked up in offshore banks, which they can't access, right? Then you've also got the Central Bank of Turkey. No one's really watching the lira right now because of what's going on in other emerging markets. So those are central banks. But before we even get into the details of central banks and what impacts that's going to have in the markets, we need to talk about the Russia-Ukraine situation. So with the Russia-Ukraine situation, what happened on Friday was we got a report that President Putin said that there were certain positive shifts that had occurred with their talks with Ukraine, right? And on Friday, we weren't exactly sure whether or not we should believe this and whether this actually, or if President Putin had planted the story to, essentially control the media narrative, right? But over the weekend, we then got Ukraine confirming that Russia had actually been more forthcoming within talks, and there was potential for some kind of peacemaking deal that we could hear of this coming week, right? And that's obviously had a positive impact in equity markets with all the main indices rising. And oil coming down and all of that comes with it. But now that I've gotten into what's going on in the markets, let's actually have a look at what that looks like visually. Okay, so I am going to open my trading platform and there we go. All right, so hopefully now you can see my screen and we're going to start this one off with the S&P 500 to sort of get a sense of where exactly we are with equity markets, right? So S&P 500, it's obviously been trading within this range between 4,400 and 4,135, right? So this is definitely the low point whereby I think it would be a good buy. However, this is on the condition that we don't get any negative news coming out of this whole war situation, right? So S&P 500, we're trading in this sideways range with where we're at right now. I expect the market to either come down to this level as a result of central bank increases in interest rates, particularly the Federal Reserve, So Wednesday, I would expect this market to be a lot lower. However, if we do get positive news flow out of the whole Russia-Ukraine situation with the talks, then you can expect the S&P 500 to test this level and maybe go even higher to 4,400, right? So S&P 500, that's the story for you. Euro dollar, you've gotten some strength in the dollar because of the fact that we've been expecting the Federal Reserve to increase interest rates. The entire discussion was actually whether it increases interest rates by 25 basis points or 50 basis points. But Jerome Powell came out last week and indicated that it's likely going to be a 25 basis point increase. Okay. So with the euro dollar, I do expect to stay within this range. However, if the euro weakens and we reach this level 110.65, I'd definitely be looking for a short right over there. Presents a really good risk reward ratio and you're trading with your back against the wall. So that could open up for a move all the way down here, particularly once we actually get the announcement of the interest rate increase, right? However, in the alternative scenario, if it's buy the rumor, sell the fact, you definitely want to be buying euro dollar off this level if we do reach that level, right? However, I don't see euro dollar going significantly lower than this because, you know, there isn't really any kind of major shift within central banks that we've gotten, unless if we get some surprise from the Federal Reserve saying that they want to be more aggressive in terms of interest rate increases, and they start talking about us maybe getting more than 6 or 7 interest rate increases. You know, at that point, you definitely want to be looking to this level as, you know, the level to short off a retracement. Okay. Next one we're looking at is the pound. Now, the Bank of England is expected to increase interest rates again, right? That's what the market anticipates. Therefore, I think the pound actually provides a very good risk reward ratio trade to the upside from here. And we could be looking to get up to these levels over here, 31.85, 131.85, and potentially even up to 133. So that's what I'm looking at on the pound, looking to go long around about these levels. But obviously you go to a shorter time frame, and if the setup presents itself, best believe I am going to capitalize on that. Now, with the US dollar against the yen, we've got it at a high that we haven't seen since 2017. Okay, so obviously we were trading in the sideways range last week, and I did point out that this was a good level to buy, that's a good level to sell. However, because the yen's lost somewhat of its safe haven capabilities, given the fact that they are a net oil importer and they actually import most of their oil from Russia, that then presents, well, that makes them less attractive from a balance of payments point of view, right? So that's what I'm pinning this rapid increase in the price of dollar yen to. So we are now sitting at the highs, which obviously means it doesn't exactly present the most attractive risk reward ratio. However, you get a retracement of this move, it will present a very good opportunity to get long. Okay, so dollar yen, if we do get some kind of a retracement, I will be looking for that retracement to buy. However, I do not want to be going against a moving train, right? And short positions are completely off the cards at this stage, right? Then we've got WTI. WTI, as I pointed out last week, it did present a really, really good risk reward ratio trade for if you were looking to get short. And that's what we've got, because we had very limited upside given the fact that we had gapped up and there was essentially a liquidity vacuum that existed over here, right? So we went on to slightly break that high, and I think the path of least resistance, unless if we get news that talks between Russia and Ukraine couldn't, they couldn't reach some kind of peacemaking deal, we could see another rise in the price of oil. However, right now, the highest probability trade is a short position in oil, right? So I'd definitely be shorting oil over here, particularly with this small bounce that we got over here. This was a really good one to take. But yeah, as in $100, I think would be the floor for this, temporary floor, however. So I'd be looking to get long roundabout here and potentially for a move up. However, I think path of least resistance is to the downside. So if you get long, it would be a short-term trade. Medium term, I think oil's coming down, and less pressure on inflation and things like that, which is positive for the global economy overall. And that's what we're all hoping to see, because I'm sure for those of us traveling up and down, we've definitely seen the price increase within oil at the pump. Here in South Africa, the price of fuel has actually gone up to 20 Rand and 80 cents. And I remember there were huge protests last year about the price of fuel getting above 20 Rand. So that's something that you're seeing globally. And in the US, I think it's above $6 a gallon or something like that. So it's really good from a global economic perspective to see the price of oil decrease like this, right? Then the other thing we're watching is gold. Gold is getting less of a safe haven bid, and that's because of the fact that geopolitical tensions are decreasing, right? So because geopolitical tensions are decreasing, you can expect gold to come off after this. Now, the level I'm watching as support is where we're at right now. Now, if gold breaks through this level, I think it can go a hell of a lot lower. So we're expecting gold to, I'm expecting gold to break through this level and go even lower, right? So right here, I think it presents a very good opportunity to get short on gold. Right now, Bitcoin, I don't know if you saw Elon Musk's tweet last night, which somewhat showed the decrease in influence that he's got in crypto, as opposed to those days when he'd tweet and Dogecoin would jump up 20-30% overnight, right? This time he tweeted that he's going to continue holding his Bitcoin, his Ethereum, and his Dogecoin, right? Given the current environment given the inflationary environment, right? So that made Bitcoin spike, but then, it was very short-lived. And as I said before, he's having less of an influence on the crypto market, thank goodness. So with Bitcoin, this is the situation. We're in a sideways range with Bitcoin, right? With Bitcoin, you've got 45,000 being the top of the range, and you've got 35,000 being the bottom of the range, right? And these areas right over here present a very good opportunity to buy, I think. And these areas over here present a good opportunity to sell, unless if you get a major shift within the market's fundamental catalyst that drives the price higher or lower than those ranges, right? So that's the story on Bitcoin right now. In the short term, what are we trading? I'm looking to trade this particular range over here between 37,700 and 42,000, right? And right here presents a very good opportunity to get long and maybe ride it all the way up to 42,000. So that's what I'm looking at, particularly if you're in the crypto all the time tournament with me. That's exactly what I'm looking to do over the next few days. And let's hope I can win another one. So that's the situation with crypto. And I am particularly interested in this instrument right now with the tournament going on. So the Crypto All the Time tournament is running from today until the 25th of March, and I'm looking to play this one to the upside. If we get over here, we'll see how the story develops, but I don't see any major fundamental catalysts that drive crypto much higher than 42,000. And that's obviously because crypto is closely tied to the equity markets right now. Right now, crypto is trading as a risk asset. So as a risk asset, crypto is highly dependent on what goes on with the Russia war situation, okay? So if we get Russia deciding on a ceasefire with Ukraine and living up to that, then you will see crypto rise higher, maybe even break the 42K level. But 45K, I think, is a bit of a stretch. So that's what I'm looking at in crypto. And another thing, please monitor the central bank action very closely, because central bank action will lead to a significant movement within the equity markets.
Now, if you like this video, please smash the like button below and subscribe to our YouTube channel for more content just like it. And if you'd like to learn how we approach the markets, you can do so by joining the Professional Trading Masterclass course using the link in the description. But other than that, I'll see you in the next one.